Hello and welcome to the special show on the new GST revamps. I'm Vishwanath Nair and you're joining us on NDTV Profit. Of course, last evening you saw the GST Council meets outcome where a whole host of announcements were made. Essentially, the biggest GST reforms in many, many years. I have with me Neeraj Shah, who's going to tell us the top 5 key takeaways for the markets because of the GST 2.0. Neeraj, over to you.
Well, the GST 2.0 is a shot in the arm for the economy, and you know that markets eventually follow earnings. So after analyzing all that's happened, talking to experts, we've nailed it down to 5 key takeaways, if it's possible to do that, by the way. But the first one is the net impact on the central government's fiscal deficit is close to about 20 basis points. Now, remember, viewers, these numbers may differ. My own colleagues might say that it's actually 30 or could be 40, but a lot of assumptions behind this based on how much does the center absorb versus not absorb. It is also only for half year for now and definitely not for the full year. So therefore, a lot of permutations and combinations. But a safe assumption as per a few analysts is that it's close to 20 basis points, so not a dramatic impact. So that's part one, a key takeaway, not a big impact on the fiscal numbers. Consumption gets a boost, and the prior income tax cut are already in play. So think of it this way. Income tax cuts, 12,000 bucks per month in the hands of the consumer. RBI has been liberal in terms of interest rates, so those are savings. And now GST, so consumption gets a big boost, which is the need of the hour from a markets and an economy perspective. The third measure and the third key impact, right, is that input costs for a lot of industries come off, which helps profitability. Think of pizzas and the paneer and the cheese and the dairy. GST coming off is a big input cost measure for almost all of these companies. That's just one example, right? Cement prices coming off, great boost for real estate and infra projects. Many such examples out there certainly boosts profitability and therefore helps earnings. So that's the other thing. If you nail it down to key beneficiaries, I think across sell-side notes, you see auto, FMCG, the whole air conditioner or AC value chain, and insurance being the key beneficiaries. On insurance, maybe it's a bit debatable, but I think company after company has come and told us that the uptick in volumes will make up for any kind of loss in margins. So therefore, these 4 sectors you got to keep in mind. Lastly, most people anticipate that this is the first of the many steps that the government will take for spurring economic activity and leading to ease of doing business. So I think these 5, you can safely say, are the key things or the key takeaways from GST 2.0 for markets.
All right, thanks for that, Neeraj. And I want to take a couple of those points forward, specifically on consumption, auto, the kind of changes that are coming in for insurance GST. And I have with me to discuss these topics further, Umesh Revankar, Executive Vice Chairman at Shriram Finance. Mr. Revankar, welcome to this conversation. I want to start off with the bus, trucks and ambulance sort of ambit, which is a key segment for you as well as a lender. There the GSTs come off from 28% to 18%, plus, of course, the consumption boost that comes in because of the various changes in food as well as other key elements. How are you seeing this play out in the broader economy, sir?
I think it's a welcome step to boost the consumption. See, many of the, if you look at the last 3 to 4 years, there were many of the items where the cost went up substantially, especially on the vehicles. With the BS6 coming, the prices went up. So many of the upgradation got postponed. Many people who would have rather upgraded the vehicles in every 3 to 4 years or 5 years, it got postponed. It's either new vehicle or even used vehicle upgrading got postponed. With some kind of a boost coming in for the through GST cut, there will be a new what to call demand that will keep coming into the various segments, not just vehicles. Even if you take a refrigerator or AC, if somebody feels that this is the right time to buy and upgrade, that itself is additional or consumption by the market. So I think the hyper economic activity which is expected during the festival period is going to create a lot of demand, and that will boost the economic activity. And we believe the credit demand will go up substantially because of that.
I wanted to also get a sense of the whole host of measures that have been taken. You've got the GST, which came in last evening, of course. You've also got the income tax benefits because of the changes in the slab rates. You've got the Reserve Bank of India cutting lending repo rate quite sharply, which will, of course, benefit the broader economy. Is there a cumulative sort of demand boost that you're seeing going ahead?
Yeah, in a way it is cumulative, but yeah, people who wears be who are in the borderline will now definitely make a chance or choice. So that's how no the consumption goes on. Nobody waits for total breakdown before buying a new. People would like to wait for right sentiments, right mood, or additional income to buy something new. So I think this is the right time. And when you say that rate cuts are there, see, sentimentally, people would like to, anyone would like, nobody would like to pay extra tax. When this tax is reduced, then you feel better that you are buying a product and not really paying a tax. So that sentiment change is very important for any consumption. I think this is going to be positive. And as you rightly said, it's a cumulative plus the added booster before the festival demand.
So, as a listed lender, what is your outlook for this financial year? Do you think that there is going to be a material change in the way that you were looking at credit growth for the year?
Yes, I think, see, we had given a guidance of 15% EM growth. And now, if there is accelerated economic activity, we believe the growth can be a little higher. It may not be substantially higher, but we will be careful in our growth. We would like to go back to 18% growth, which we had in the last 2 years, if everything is fine.
18%. The other question around the urban and the rural consumption story. Now, if you were to look at where Q1 GDP is coming in, that consumption improvement is showing up, at least in Q1. The broad expectation was Q2 wouldn't be as strong, but now obviously all of these measures are building in for Q3. How are you seeing the consumption trends ongoing, when you're looking at your borrowers, when you're looking at people on the street or the general population, or even you as a consumer? How is that consumption story changing, sir?
No, fundamentally, consumptions were reasonably good. The only thing is there was no additional boost for consumption because you need a reason for making any additional consumption, additional purchases. So now you have one, and a festive period coming is another time opportunity. No, timing also is very important. So people would like to make changes or buy new thing during the festive period, maybe a Dasara, maybe a Diwali. So these are all the opportunistic time for people to make choices and changes. So I think it's the right opportunity, and I believe that will help the economic activity to improve.
Do you, as one of the key beneficiaries of wherever the Reserve Bank of India takes the interest rates, do you foresee room for more rate cut if the demand situation suddenly starts picking up, or do you think maybe interest rates are great at where they are and you don't want overheating of the economy, so we'll maintain where it is?
See, there are certain what you call segments which are interest sensitive, and there definitely lower interest rate helps, especially the real estate or the white goods or car. And these are the items where no some interest reduction will help tilt for higher buying. So I think interest rate reduction further will help there in consumer. But when it comes to our business, mostly lending to MSME segments, they always want lower interest rate. It is not that no they want a particular reason, but for them to bring down the cost of production, cost of inventory, and pass it on to the consumer, for them, the lower interest rate is always required. I think there I strongly believe the interest rate reduction will help the MSME segments, which will help them to increase their business volumes and also marketing ability.
Just coming on the questions around margins. Now, of course, that's where the profitability question gets answered quite a bit. Yes, there is going to be business growth, but with the current interest rate scenario, do you think that there is room then for margins to continue where they are, go up, go down? Where do you see them going?
So margins will continue to remain same. I don't think there is margin expansion because of the interest rate, because over the period you pass it on to the consumer. So you don't retain the margins forever. It is a temporary timing. You will have either excess or little lesser margins. That doesn't matter. But how much you are able to pass it on to the consumer, and how much more consumption or how much more bigger demand you create, that's very important.
Okay. I wanted to touch upon the insurance side of the story as well, because that's obviously somewhere where a lot of conversation is happening. And while confusion on the street may remain, the sector seems to be suggesting that the way the rates have been cut to zero, that would be something that is beneficial for the broader sector. What is your view, sir?
No, I strongly believe that very essential products like term insurance and life definitely deserve the GST cut to nil tax, because see, in India the insurance penetration is one of the lowest in the world. We have a total insurance penetration of 3.7 percent, wherein most of the other countries it is above 6 to 8%. So that means there is a very low insurance penetration in India, and therefore to create a positive image, a positive feeling towards insurance, and people to buy insurance is very important. I think the government has done a right thing by creating a feeling that this is an essential part for you, and therefore the interest rate, tax is made zero. That messaging is very important. I think that really helps.
All right, Mr. Revankar, thank you so much for joining us on this conversation, sir. It's been a pleasure, as always, talking to you.
Yeah, thank you.
All right, so that was Umesh Revankar of Shriram Finance joining in, talking about where this credit growth scenario is going to move now that the broader sentiments in the economy seem to be improving. Now, just telling you about another conversation that we had, that was with R.G. Chandramogan, chairman of Hudson Agro, on how the new GST reform will have an impact on the markets. Listen into this conversation.
How are you viewing this notification now that it is official, the rate cut that's happening for the entire dairy space? And this is not just dairy products, it's also for premium products like paneer. How is the industry viewing this?
We asked for some rain, but there is a cloud burst. Probably it has been raining, as a matter of fact.
Yeah. Absolutely, absolutely, it is. And so, industry-wide, just want to understand as to how will this benefit the dairy sector demand as a whole?
See, there are two benefits we can look at. One is consumer benefit, consumer spending. Another is putting money in the rural pockets of farmer, which will definitely benefit the farmers' spending capacity. In fact, we are already working on passing almost half the benefit to the farmer and half the benefit to the consumers on whatever we are getting it as a tax exemption. This will stimulate demand. Not only that, the rural spending capacity will increase substantially over the period.
And Mr. Chandramogan, so the question then comes to my mind is that considering this GST that will be reduced, and generally this is on the price point itself, just want to understand that how elastic is the demand when it comes to pricing in the dairy segment. And I'll divide this into two things. One is your core milk, when it comes to milk and curd, but then it also comes to premium products like paneer. How are you viewing this differently in terms of where elasticity of demand is concerned?
See, milk has got no tax. That is not going to much of a disturbance or whatever it is. Curd has got already 5% tax. It remains the same. We are also into ice cream where it was 18% tax. Now it is brought down to 5%. Paneer, we are there. paneer is getting removed. But paneer, what has happened? The input tax credit will not be available. So marginally the price increase will be there, but there is no tax. So the consumer will get it at a low price, even for paneer and every other item. And this is going to be a bonanza for consumers, and this will stimulate a bigger demand for products and services. And also, farmer will be benefited in a big manner. In my last interview, when I said about more than 100 rupees, it goes to GST. Once when we are selling butter and SMP, this is coming down drastically to 30 rupees. So most of the benefits can be passed on to the farmer, who will be able to earn more money. And with these lower taxes, he will also have a better spending capacity, and he will be able to save money also for the future for their family. This is going to be a big bonanza. This is a revolution, I can say. The tax revolution is going to help the economy in a much better manner.
Interesting. And when you say that, you know, that 100 rupees which was earlier going to GST will now come down to 30 rupees, so that's a benefit of around 70 rupees for you as a whole. Does this mean that for you, going forward, the overall margin picture looks better?
No. See, actually, this is for 25 liters of milk. What I am saying is as
Okay.
the benefit of 70 rupees. So half of it will go to consumer, half of it will go to the farmer. Farmer price revision, we are going to announce it in the next 3-4 days. We are just looking at the structure, and we want to give a better benefit to the farmer so that he is in that business, and we can just encourage him to just buy more cows and be more productive. So we are looking at the benefit of farmer and consumer both together. This tax benefit will be shared between these two people.
Okay, and can you give us a rough idea as to how much the price will come down by, though you're still evaluating, but just a rough picture as to how this can be calculated going forward and how this will benefit the consumers?
The milk will not benefit anything. Milk doesn't have any tax. Curd will also not benefit. Paneer, definitely there will be a benefit. But ice cream, the benefit will be too high. Ice cream benefit will be very high, and we are still working on it. And there will be a lot of structuring work that is going on. And offhand, I'm not able to say that. But definitely the prices may come down by about 8 to 9% without any difficulty.
Understood. And when it comes to these value-added products for you, you know, the trend in this dairy industry has been the rise of value-added products, because that is what is eventually aiding your margins as well as bottom line. Now that this GST rate has cut in, I believe that has come in, I believe that you know, your overall demand for value-added products is set to go up. So what is your reading with regards to where this demand for paneer, ice creams, etc. is concerned, especially when that particular segment is so competitive on the rise of this quick commerce, because quick commerce is offering you know, platform to brands which are not you know, in the listed space or the organized space?
See, value-added item is a myth in my opinion. The issue is whether you have a brand for the consumer which can sell. If I am selling a particular cheese or anything to a Horeca customer, I am supplying a commodity. The value addition goes to the guy who is selling the end product. So this is not that value added game or anything. If I can sell to the consumer directly, we get the benefit. And this has to be done by a brand. Even for e-commerce people, the brand is the one that sells easily. If you look at our company, we have got 4 brands. All 4 brands are market leaders, either in the number 1 position or number 2 position or number 3 position. So this is what we look at. It is not necessarily a value-added product which is spread all over India without any margin, spending on logistics or supplying to the hotels. And this is not on the basis of product. It is on the popularity of a particular category in a given market. That is brand that is going to help. And we are not selling for credit. The reason is the brand gets a premium. The brand is the value-added item, not the product, in my opinion.
And that makes sense, because from what I understand is that the consumer pattern also works like that in the dairy industry. If one person uses a particular brand and has loyalty towards the brand, the person continues to use that brand going forward as well. And then the price elasticity there doesn't matter. Is that reading correct?
That's right. Actually, one of the person just came to me and he was saying milk is not a value-added item. And I told him that you go to your wife and ask her to change the brand of milk what she is using. She may not change the brand, but she may change you, I said. So brand matters. It is just
Yeah.
not anything else.
Absolutely. Mr. Chandramohan, now that we've taken into consideration the entire GST aspect, just want to understand from you that because this will get in an incremental demand and also, overall augur growth in terms of volumes for you, what is the kind of anticipation now as to how this will, boost demand and henceforth boost your volumes also going forward and lead to a, better growth in terms of your top line?
See, top line will also grow because of better spending given concession to different GST for different products. So the affordability of the people will help us to get the benefit in milk as well as curd, which is not getting any tax benefit because milk is already tax free, curd is already taxed at 5%. These segments are not benefited by GST, but the segment that will be benefited is ice cream. Not only that, the overall benefit of the economy will benefit the consumption of milk, curd, and ice cream. I expect next year we can expect a growth of 20% in my opinion.
That's quite an interesting one because, I was just going through your financials for the past 4 odd years, and I saw that the CAGR growth there had been around 12 to 13 odd percent. So you expecting a 20% growth because of this GST reform is a big statement to make, Mr. Chandramohan. One more thing that I wanted to understand is that, in the past 1 or 2 odd years, you've done a lot of capex. Just want to understand as to, now because this capex will come into play for you in a big way, because once your demand get boosted, you will have capacity utilizations at higher level. How are you reading that? Most of your capex now, I believe, is done. Where are you viewing capacity utilizations at post this demand boost, and where are they at right now?
The capex is mostly done, as you said. And we also did the capex in the new markets like Maharashtra and Telangana. So these markets require some blossoming. So our heavy capex also gave a slowdown because we were building a market in a new territory. Now that is also set. That is the confidence with which I am saying growth will be good in the coming year. Now we have already done the base work. The growth will come even the existing market as well as the new market of geography. So we are expecting that growth. And GST is definitely a excellent booster to economy overall. That will benefit even the sectors like milk and curd.
Understood. Mr. Chandramohan, one last question to you. Last month, correct me if I'm wrong here, the dairy cooperatives had raised their milk prices. And generally what happens is if dairy, cooperatives raise their milk prices, company as a whole also has to go ahead and raise the prices. But now that this GST boost has come in, the likely price hike would not be required. Do you think there will be a rollback when it comes to these dairy cooperative prices, or how is that being viewed?
See, dairy cooperative prices increase is not throughout the country. It depends on the different.
What all item would fall under that category, and whether the tax incidence would remain same across the item which is in this category, sir?
Shimi, on 40% category, there are very few items, and the items are like sin goods, which we consider tobacco products and pan masala, that we consider as sin goods. So on that, the rate has been kept at 40%. Apart from that, on luxury cars, which presently were attracting 28% plus compensations as of varying from 20% to 13% and lower. So those cars will be attracting now 40% rate from 22nd September onwards. But the small cars, which were attracting 20% plus 1% compensation cess, so those cars will now be attracting 18% rate. So the rate is reduced on small cars, whereas the luxury cars will continue to attract the rate at 40%. Some cars which were attracting a rate more than 40% are now will be at 40% because 40% is the maximum rate which can be levied under GST law.
So, So just a clarity here, since the finance minister also said and stated that the tax incidence would remain the same, especially for tobacco products. And as you are explaining here that other items like all the premium and luxury segment, whether it's car or carbonated drinks, which are in the 40% special category, is going to be more or less neutral. So is it a significant boost to all these luxury and premium segment?
Yes. So, as you have mentioned that aerated waters, in fact, I could not mention in my reply that aerated water and certain other products which were earlier attracting 28% plus 12% compensation cess will continue to attract 40%. And few more items have been added in that. Those are non-alcoholic beverages. So in that, this non-alcoholic beer or certain items like Red Bull and these energy drinks will now be attracting 40% rate. Apart from that, there are certain services which will also be attracting 40% rate, like admission to, say, IPL or admission to casino.
All right. So that was Sanjay Kumar Agarwal, the commissioner of the CBIC, talking to my colleague Shrimi Chaudhary in Delhi. So that's all we have today on the special broadcast on the GST 2.0. Thank you so much for watching. Stay tuned to NDTV Profit for more news and updates.